Morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 12th of June 2012. We're going to be doing our 4 majors on the 4 major pairs this morning: Euro, Sterling, US Franc and the US Japanese Yen. Let's have a look at the Euro first on our daily. What happened yesterday? Well, to start with, we had this knee-jerk reaction. I mentioned to our students yesterday, we had this knee-jerk reaction relating to the news out on Saturday. The Spanish banks getting 100 billion euro loan, inverted commas. So we had a bit of upside movement on the start of the Asian session. However, during the course of the morning, remains pretty much flat, and then through the US session we saw price reverting to the downside. So very much a knee-jerk reaction. Getting 100 billion euros in an advanced loan for the Spanish banks, yeah, it sounds good, but it doesn't sound good long term. We know there are serious issues out there, and this is predominantly the start of a lot to come from Spain, I presume. And it's not a good sign, to be honest with you. So we saw price pulling slightly higher yesterday, testing that 12,6,500, which happened to be that very strong support and resistance level that is in play, or has been in play. Was a previous support area back in early January of this year. And if I just put a nice horizontal line, you can quite clearly see here in January, and look at that, back in what's that, July, August, September of 2010. Another hesitation, a very strong support area being breached, and price failing to actually find higher highs, or reattempt a high or break this resistance level. Now price support becomes a new resistance, and I feel we should start seeing price reverting to the downside, with those lows back down here at 12.35 being targeted very soon. So bearish engulfing this candle over here, engulfing all of this sideways motion, this indecisiveness that we've seen over here on this pullback. Now I feel that we might see a rerun or a retest of that 12.3500 we saw just recently to the bottom, and then more likely a break of that quite soon would favor further downside movements. We look at our weekly charts. Break of that 12.35 would definitely see price reverting and testing those June lows that we saw in 2010, roughly around the 11,900 mark. So intraday, let's start looking for some shorting opportunities. Look for the lows, see how the Asian session, look for the break of the Asian session low going into European Open, and keep it stops nice and tight for at least at 12.3500 being our first target for today. Next up, Sterling. Here again, the same thing. Yesterday, the previous night, Sunday night, Monday morning open on the Asian session, we saw the same thing happen as happened with the European, the Euro, knee-jerk, price moving higher, tentatively testing prior highs, and only subsequently for price to revert to the downside going into the close of the US session. And on the Asian session last night, not a hell of a trading, small trading range, and most of it seems to be bearish. Finding more emphasis on the downside of that candle, that very small trading range as we go into the Asian session open this morning. So things are not looking all that fantastic for these two pairs. The two start of the 2 majors, price failing to actually find any well-deserved support above the 23.6 fib retracement area on this bounce, and in doing so finding a lot of resistance here at the 15,500 mark, and the longer it continues to do so, the more likelihood we're going to see price reversing to the downside quite soon, with ultimately our targets back down towards the 15,250 as our first port of call. We all know at 1525, 15,300 is a major support and resistance level, guys. I just want to make that well aware to you chaps out there who don't look at the longer term time frames. Do suggest having a quick look at them every now and again, because you can quite clearly see on our weekly chart that that's 15,300, a major support going well back to September of 2010, the start of 2011, and the end of 2011 before we saw 2012 also becoming a noticeable touch or breach. So you can see quite clearly just recently in May a bounce on that. Psychologically, anybody who's shorting these highs well up here in May would have taken and definitely looked at the overall target being down here at 15,300 in this very negative month, as we have had so many bounces here once price had reached this milestone. So if prices remain still bearish, a retest of this 15,300 would be on quite soon. However, we do and would need to see a breach of this 15,300 to see any further negative sentiment outplaying for the foreseeable future. If we did see that happening, it would be a very, very negative sentiment outlook for this pair. There's not much help really in the way now to the next level, roughly around the 14,500 mark, and that's a huge fall, guys. Slight hesitation here just below the 15,500, but overall not much in the terms of resistance to the downside. And that would be our first port of call, roughly around the 14,500 mark, before we could see these all-time lows that we saw back in 2009 just short or just around the 13,500 mark. So a lot, there's another 1,000 pips between that move there. So there's a lot of movement to be seen to the downside if and when price would have to break or would break the 15,300. Very, very important. So daily, back to our daily chart, you can see that price is failing to find any well-maintained support above 23.6. So this pullback or this bounce we're seeing is not all that all that sharp a bounce, and the longer it maintains below the 23.6, the more likely is this bounce is not very decisive to the upside, and we could see a retest of this 15,300 quite soon. Onto the US dollar Swiss franc, good old Swissy. Recently we saw this pair breaking highs, at 960 in particular. There we go. Prior high over here, for example, a major high, obviously that would have been an area where price would have to have broken and found support. We did see that subsequently last week at the end of the thing, but unfortunately we saw price reverting and breaking lower just recently and finding resistance. However, yesterday's candle, because of what's happened in euro and in sterling figures, we saw a huge upside bullish engulfing. As I mentioned on the last week's analysis before then, is we needed to see price now finding a reason to be above 960 in order to see any further extensions to the up. Failure to do so would have seen price reverting to the downside again, with potential for the following support and resistance levels to the downside. 38.2, yesterday's bounce occurred on, but ultimately a bearish engulfing here would have actually seen price reverting to the downside with at least the 50% within 61.8 as potential targets to the downside. I said we had to get above this area at 960 very, very quickly, and sure enough, yesterday's candle really did exactly that. We opened quite low, but at the end of the day, we finished quite high, and this candle over here, very, very decisive, a very decisive upside candle, and in doing so, taking us above this very strong support and resistance level here at the 960. So what we want to see now is today's candle showing us that momentum was a true upside candle favorite, and we want to see price now building on that upside candle yesterday and targeting the prior highs that we saw here at 970,500 at least. So as long as price maintains the 960 as support, then we should be looking for 975 or higher as our next target for the remainder of this week. Last pair of the day is US dollar Japanese yen. Let's have a look. The last couple of days we've seen a little bit of hesitation at the underside of 80, a very strong price support and resistance level. Price has been sitting playing with us for so long now, a number of weeks, in fact an actual month to be honest with you. This is after this major pullback that we've seen recently since testing these major highs here back in March of this year. So we've had this massive upside rally, and since we've hit the 8400, which happened to be a prior major support and resistance level, price has failed to maintain those that momentum drive to the upside and subsequently fallen backwards and fallen back towards the prior breakouts here at the 80. However, it hasn't maintained or found support at this level here, and unfortunately we had this bearish engulfing which confirmed that sentiment was still looking negative long term, and sure enough we saw lower swings which actually dictated that we should see potential for further downside movement, and that's exactly what we did get. However, bounce on the institutional moving average has seen price reverting to the upside and trying its hardest to try and find a reason to be up again around the 80 again. Unfortunately, it's still negative, and as long as it maintains below the 80, we should still be looking for a negative outlook. It's paramount that if this is to be or to start changing the market sentiment from a more of a bearish stance to a bullish stance, we need to get above 80 as soon as possible. That happened to be a very strong price support and resistance level, and if we get above it, that's a clear signal that price is favored for further extensions to the upside. However, the longer it maintains below 80, the more likely we're going to see price reversion to the downside. So a lot of hesitation over the past couple of days, and when it fails to actually rally and break above with a nice bullish engulfing pattern of some sort, we could ultimately see a consolidation at the underside of this major support and resistance level, and in doing so, price would be finding or trading, there'd be a lot more movement below 80 than above it, and in doing so, this would stem or look very negative, and sure enough, it could very well play out to be a negative trade for the foreseeable future. So we would need to see a breach of 80 in order to see any bullish trades, and as long as it remains below 80, we should be looking for an outlook for bears to the downside. That's it, guys. Hope you have a fantastic trading day. Please make sure that you look at the news announcements to see if there's anything out there that's going to move the market today. We do have 9:30 GMT this morning. We have the manufacturing product month-on-month figures. They're expecting a forecast of a contract. The previous figures was 0.9%, and they're expecting a forecast of 0.0%. So they're expecting the manufacturing side to have contracted over the last month. If it comes up negative, worse than that, expect sterling to fall. So that would we want to definitely watch. And then we have the federal budget balance later on this afternoon, this evening at 7 p.m. GMT on the US. The previous figure was positive, 59.1 billion, expecting a forecast of 112.7 billion negative. So the federal budget balance negative forecast. If it comes out slightly higher than that, i.e. more positive, then it could be quite good for the US dollar. However, it comes out higher than that, i.e. 112 or more, 113, etc. Expect the US dollar to get a bit of a hammering. Okay, guys, please make sure you follow the rules of the CTC, back it up with sound money management, and keep it simple. I cannot keep reminding you guys to keep your trading simple. Don't over complicate it. People get into a lot of trouble when they start to overcomplicate their trading. Just look for major support and resistance levels. Notice what price is doing in conjunction with those major support levels, and look at candlestick price action. Is it telling you something? And last and all, you can use the CTC strategy to definitely give you an added bonus, an extra egg into your basket because of the confirmation signals that it generates. Other than that, have a fantastic day, and I'll see you first thing tomorrow morning. Until then, trade serenely.